with Geoff Bostick at Guaranteed Rate, and just wanted to take a minute to talk about the changing landscapes. And I'm sure you have seen on the news that the Fed has cut rates and will be continuing to cut rates, it seems, throughout the next year or so, and wanted to talk about how that impacts your timing, whether you are buying, selling, or trying to time both a buy and a sale.
We've seen a huge move down over the past 6 months where rates were probably mid-sevens back in April, and they were even eights if we go back to last year. So over the past year, we've seen rates move from mid-sevens and eights down to low sixes, some instances even high fives. So that's between 1.5% and 2% drop over the past year. And all of that move is based on the anticipation that the Fed was going to lower rates and now the action of it. So we're starting to see that move down, and a huge benefit where lots more buying power for buyers out there. So there's definitely some opportunity to take advantage of that now. And then as we look ahead, the forecast for the Fed is another probably 0.75% to 1% drop through 2025. So we're likely to see, we're not going to wait for the Fed to actually make those moves. We're going to see rates start to move down in anticipation of that. All right, so here's a quick look at the Fed's dot plot chart. And what this is, just to kind of give a quick overview, it's an anonymous chart of all the Fed presidents that vote. And what they are forecasting is where they see rates going for the Fed funds rate over the next year, as far as where they're going to end at the end of 2025, as well as 2026 and beyond. So as we can see in this chart here, you can see rates are lowering over the next 2 years plus, and that's just going to impact mortgage rates indirectly, but as well as all the other rates as far as equity lines, credit cards, auto loans. We should see interest rates become less restrictive and more accommodative, and just increase buying power all around. Now it's kind of a great chance to get in maybe before a rush of new buyers with lower rates.
Yeah, so what I generally recommend to most buyers is that it is usually in your benefit long term to not necessarily wait until those rates drop, because as we see rates drop and the number of buyers increasing in the market, that only pushes prices further up. So now might even be that sweet spot of we're starting to see rates be a little bit more affordable. You might qualify for what you want, but that payment might be a little more than you're comfortable with. But since we kind of know and we've gotten a heads up that rates are going to be dropping, it might be to your benefit to kind of make those plans to move, or make that move sooner rather than later, and then really be able to capture that equity as it increases as the rates start to drop.